Welcome to your daily Solo 401k webinar and Q&A session with my Solo 401k Financial, where we help you to stop overpaying taxes and start building real retirement wealth. Today's topic is Merrill Edge's Solo 401k Review 2025. Are high fees worth it? This is your chance to get answers. Please use the chat to ask questions on today's topic or anything else. Chat them over now so that we can be sure to get to them all. Let's get started. So as always, the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. So let's first start out, before we dive into the meat of the discussion around Merrill Edge's Solo 401k Review and whether high fees are worth it, let's first lay the foundation with a discussion around Solo 401k eligibility. So what is a Solo 401k? A Solo 401k is a retirement plan for self-employed individuals. In order to be eligible to set up a Solo 401k, you need to be self-employed with no full-time W-2 employees. So some of the top eligibility considerations include, do I need a separate entity, such as a separate LLC or an S-Corp? The answer is no. We have many customers who operate, for example, as sole proprietors, and that's fine. They would still be eligible to set up a Solo 401k as long as they're reporting earned self-employment income on their taxes. So earned self-employment income would include, for example, income reported on Schedule C of your 1040 if your business is taxed as a sole proprietorship or a single member LLC taxed as a sole proprietorship. Income reported on a W-2, for example, if your business is taxed as an S-Corp or a C-Corp, or income reported on line 14 of your K-1 in the event that your business is taxed as a partnership. Now, there's no minimum amount of earned self-employment income that you need in order to be eligible to set up a plan. But of course, your ability to contribute to the plan is a function of your earned self-employment income. So if you don't have a very high amount of earned self-employment income, you could still set up a plan, you could still roll over money, you could still take a 401k loan or invest in alternative investments. But your ability to contribute, at least for that year, may be relatively small if you don't have relatively much in the amount of earned self-employment income. Additional top considerations are whether or not your spouse or business partner can participate in the Solo 401k. And the answer is yes, as long as your spouse or business partner are also working in the business and reporting their own earned self-employment income. You can also have a Solo 401k even if you have a W-2 job, a day job, even if you participate in your W-2 employer-sponsored plan. As long as you've got that separate earned self-employment income with no non-owner, non-spouse, full-time W-2 employees working for any business owned by you or a spouse, if any. So if you are eligible to set up a Solo 401k, one option is to open up a Solo 401k, a basic Solo 401k plan at Merrill Edge. Now, we wanted to take the time to highlight the fees that are published on Merrill Edge's website to give our community a chance to be educated about those costs. And then as a next step, compare the Merrill Edge Solo 401k with a self-directed Solo 401k, such as the one offered by my Solo 401k Financial. There's a lot of, for example, educational material out there which highlights the fact or the impact that fees can have on your Solo 401k or retirement account balances generally, especially over the long term. So it's very important to understand the fees and then to understand the impact that those fees might have on your retirement account balances, especially over a longer horizon. So let's first start out by just reviewing the fees that are published on Merrill Edge's website. So they have two fees or two parts of their fees, two components you could think of their fees. One is a base fee, so an annual base fee, and then one is an asset-based fee. So the base fee is the same regardless of the value of your account, whereas the asset-based fee is a percentage of the assets. So the base fee will depend on the value of your account. So it's $20 plus $3 per employee. So that would be $23 in the case of a one participant plan when the value of your plan is less than $250,000. It's $28 if the value of our plan is more than $250,000, and that's a monthly fee. So over the course of 1 year, that would amount to $276 if the value of your account is less than $250,000, or $336 if the value of your account is greater than $250,000. So that's the base annual solo 401k fee. And then in addition to that, Merrill Edge charges an asset-based fee of 0.52% of the value of your account. So even though that fee, that asset-based fee on the surface seems relatively low, less than 1%, as we'll see on the next slide, the impact can be significant, especially over many years, which of course is what the intention is typically with a retirement account, is to have it over many years. So for example, the solo 401k plan offered by my solo 401k financial, we charge a flat $125 fee on an annual basis. So the initial cost is $650, which includes the $525 establishment fee, plus the first $125 annual fee. Then starting 12 months later, we charge our $125 annual fee that covers the second year. And so our fee is the same regardless of the account balance. Our fee is the same regardless of whether there's one participant or two participants, like say a husband and wife that are both working in the business, both reporting their own earned self-employment income. So with Merrill Edge's plan, again, the fees are going to be a percentage of the balance. So this table does a good job of just highlighting what those fees might be, especially as the account balance grows. So in the upper left, we've got a 1 year time period with a $100,000 account balance. So in that case, the Merrill Edge's fees between the base fee and the asset-based fee would amount to $796. And then you could see as the account balance goes up, for example, $500,000 in that first year, the Merrill Edge fees between the base fee plus the asset-based fee would amount to $2,936. And then over $5,500 if the account balance is $1 million. And then as you go down the chart, you can see over 5 years, over 10 years, over 20 years. So for example, with a $500,000 account balance over 20 years, the Merrill Edge fees would amount to over $58,000. Whereas with the solo 401k plan offered by my solo 401k financial, our fees would amount to $2,500. So over a long time period, you can see that those asset-based fees can really amount to a very significant difference between a flat fee approach, such as the one offered by my solo 401k financial. And ultimately, that's going to amount to, all things being equal, more money in your retirement account balance. So those studies there's definitely some truth to those educational studies that I alluded to, just of the impact of fees on your account balances, especially over a long time period. So it's important to understand those fees. And then to also understand, okay, well, what are the features that are available under the Merrill Edge plan compared to a self-directed plan, such as the one offered by my solo 401k financial? So this is a good chart as it highlights the additional features that are available under the plan offered by my solo 401k financial that are not offered under the solo 401k plan provided by Merrill Edge based on the information published on their website. For example, one of the top reasons that customers open accounts with us is the ability to make mega backdoor Roth solo 401k contributions. So if you set up a solo 401k through Merrill Edge, their plan does not allow you to make mega backdoor Roth solo 401k contributions, because in order to make those mega backdoor Roth solo 401k contributions, you need to have plan documents that allow for, number one, voluntary after-tax contributions, and then number two, an in-plan conversion of those voluntary after-tax funds either to a Roth Solo 401k or out of the plan to a Roth IRA. And Merrill Edge's Solo 401k plan documents simply don't support it. Now, our plan documents do. So the plan documents provided by my Solo 401k Financial, they of course support the ability to make those mega backdoor Roth contributions. In addition, as I mentioned, it's one of the top reasons that customers sign up with us, and we have deep experience in guiding clients through the required steps. So helping clients open the requisite number of accounts. For example, one needs a separate after-tax account as well as a separate Roth account. Helping clients understand how much they can contribute. Providing the ongoing compliance support as an optional free service. So as I mentioned, when you make a mega backdoor Roth Solo 401k contribution, it's a two-step process. That first step, the voluntary after-tax contribution, that doesn't need to be reported. It doesn't need to be reported on the personal tax return or the business tax return. It doesn't need to be reported on the W-2. For example, if the business is taxed as an S Corp or a C Corp. But the second step, when those voluntary after-tax Solo 401k funds are transferred either to a Roth Solo 401k or to a Roth IRA, that would need to be reported on a Form 1099-R. And again, we handle that as an optional free service. Customers just have to let us know in a timely fashion. We have an online form that clients use to provide us the information we need in order to be able to prepare the 1099-R. Now, what's interesting is that customers will obtain the Solo 401k plan documents from us, but then open their accounts at the bank or brokerage of choice. And even though Merrill Edge doesn't offer their own Solo 401k plan that allows you to make mega backdoor Roth Solo 401k contributions, they will open up accounts like a lot of the brokerage firms do, such as Fidelity, Schwab, just to name a couple. Merrill Edge will also open up accounts that are governed by third-party plan documents. So our customers can have their Solo 401k plan through us, meaning the documents, but have their accounts at Merrill Edge. So they can get the best of both worlds if they want to have their accounts at Merrill Edge, as well as have the ability to make mega backdoor Roth contributions, as well as the other features that are listed here on this chart. So let's go through the other features that are listed here. So for example, not only does our plan allow you to make mega backdoor Roth contributions, there are additional ways that our plan would allow someone to accumulate funds in their Roth account. One would be the ability to make in-plan Roth conversions, or it's also referred to sometimes as a Roth rollover. This is where you move money that's already in your Solo 401k, but it's in a pre-tax status, and you move it to a Roth status. So it could be funds that were contributed to the Solo 401k on a pre-tax basis, or it could be pre-tax funds that were rolled over from another retirement account, say a former employer plan or a pre-tax IRA, and rolled over to the pre-tax Solo 401k. Then once they're in the pre-tax Solo 401k, the plan would allow you to convert those funds from a pre-tax status to a post-tax status. So that means that, of course, that's going to be taxable. It's also going to be reportable. And again, just like with the mega backdoor Roth contributions, we handle the required 1099-R as an optional free service. In addition, our plan would allow for employer contributions to be made as Roth contributions. So historically, employer contributions could only be made as pre-tax contributions. So they reduce the taxable income for the year for which the contribution was made. But under Secure Act 2.0, now if you have a plan that allows for employer contributions to be made as Roth contributions, you can make those types of contributions. So just like Merrill Edge's Solo 401k plan, their basic plan doesn't allow for mega backdoor Roth, doesn't allow for in-plan Roth conversions. Merrill Edge's Solo 401k plan documents also do not allow for employer contributions to be made as Roth contributions, whereas our plan documents do. But again, you could still have your accounts at Merrill Edge. Now, in terms of investments, Merrill Edge's Solo 401k plan, their basic plan, will allow for their customers to invest in mutual funds and model portfolios. Whereas with our Solo 401k plan documents, of course, you can invest in those types of investments, but you can also invest in additional types of investments, such as individual stocks. So publicly traded stocks, for example, think of, for example, Netflix or Tesla, etc. Moreover, our plan documents will allow for investing in alternative investments, true alternative investments, such as real estate, crypto, precious metals, pre-IPO stocks, private equity, just to name a few. So again, in order to be able to invest in those types of investments, you need to have a plan that allows for it, and ours certainly does. Now, for those customers that want to invest in alternative investments, they'll oftentimes want to have checkbook control. So checkbook control means you have an account where it gives the Solo 401k owner checkbook access to the account. So we don't hold or have access to any of our customers' funds, but we're still very hands-on in helping customers open up accounts. And per the next row, we help customers open up accounts at the bank or brokerage of choice. So it could be at Merrill Edge, it could be at Fidelity, it could be at Schwab. We've helped customers open up accounts at hundreds of different banks and credit unions. So those accounts will oftentimes come with a checkbook. For example, the Fidelity accounts come with a checkbook. The Schwab accounts come with a checkbook. Of course, the bank or credit union accounts come with a checkbook. So for those that want to invest in alternative investments, oftentimes they want to be able to act quickly to take advantage of investment opportunities. And having that checkbook control, that wire control, that ACH control allows them to be able to act quickly to take advantage of investment opportunities. And then finally, the flat fee. So as we went through with the previous slides, Merrill Edge's fees, there's two components. There is a flat fee, their base fee, but in addition, they have an asset-based fee, which will increase as the value of the account increases because it's a percentage of the account balance. Whereas with our Solo 401k plan, our fee is the same. So you know exactly what you're signing up for. It's not going to go up as the value of your plan goes up. It's not going to go up if you need additional compliance support because, for example, the 1099-R, the 5500EZ, loan documents, all of that is included as an optional free service. Okay, wonderful. Well, that takes us to the end of the slides that we wanted to share. We really appreciate you participating in today's session. If this information is helping you feel more confident about your future, please take 1 second to like and subscribe. Liking tells the platform that this content is valuable, which helps other solopreneurs like you find it. Subscribing will guarantee that you get notifications of all of our crucial content. We go live every day. If you subscribe, you'll get notifications. You can join live, ask questions, or just hear the content that we're going through to help you secure your retirement. So now let's turn to the questions. Thank you so much for bringing the questions. I have a Fidelity self-employed 401k account currently. However, the account was made with the wrong entity. I have established the correct entity with EIN number and would like to construct more flexible Solo 401k options. Could my Solo 401k allow more alternative investments while still using Fidelity mainframe while changing to my new company? In short, yes, that's one of the most common reasons that customers sign up with us. They have a basic Solo 401k at Fidelity, and now they want more advanced features, whether that's the ability to make mega backdoor Roth contributions, whether that's the ability to claim $1,500 in Solo 401k tax credits, because setting up our plan will make the self-employed business eligible to claim tax credits of $500 per year for 3 consecutive years. And that's whether it's a new plan or if you're upgrading an existing plan. Could be an existing plan at Merrill Edge or Fidelity, etc. Or another feature that's very a common use case is the ability to invest in alternative investments. So the process is referred to as a restatement. So it's not as if the existing Solo 401k plan at Fidelity is closed and then a new plan is established. No, that existing plan will continue, but that existing plan right now you have your accounts at Fidelity and the plan documents are Fidelity. Fidelity's plan documents are limiting what you want to do. So those documents can be cut out and replaced with our documents. So the plan continues, but now it's governed by our plan documents. Now, as part of that restatement process, we draft restated plan documents. When we draft the restated plan documents, we can update the sponsors. We can update the self-employed business, your new company that sponsors the Solo 401k plan. New accounts will need to be established. Those new accounts can be a Fidelity. We guide our customers through the process to open up those new accounts. We prepare the paperwork to transfer the cash and assets over from the pre-existing accounts at Fidelity to the new accounts at Fidelity. In addition, for those that are looking to invest in alternative investments, they'll oftentimes find that it's helpful to have a bank account. And you can have both. You can have a brokerage account at Fidelity as well as a bank account. They will oftentimes want to have that bank account because now they will not only have access to a checkbook, because the Fidelity brokerage accounts that our customers are opening up for their Solo 401k plan does come with a free checkbook, but they also might want the ability to ACH money easily in and out of the account, or maybe have access to a certified bank check, things that are not available through the Fidelity brokerage account. So having that bank account might facilitate those alternative investments. Hopefully that helps. Thank you so much for bringing the good question. If there are more questions, please don't hesitate to chat it over. We do have a little bit more time, and we really appreciate the chance to go through your questions and topics. In the meantime, we'll invite you to our community. We have the largest community of solopreneurs, Solo 401k owners, over 30,000 members, which translates to a vibrant community. We have forums, we have a library of videos and webinars. So there's a lot of great ways to learn and to share the knowledge in the community. It's totally free to join. You can join quickly and easily at mysolo401k.net/my-community. All right, it looks like it takes us to the end of the questions for today. That's it for today's Solo 401k session. Thank you so much for investing your time with us. Your time is valuable and your retirement future is worth it. If you haven't yet, please like and subscribe so we can keep building this community. We'll be back here tomorrow with more crucial content to help you secure your retirement. If you email us at business@mysolo401k.net, that would be the best way. You can also go to mysolo401k.net and click on open account, and you can sign up 24/7 on the website as well. So just mysolo401k.net and then click on open account and then Solo 401k. Thank you so much. Appreciate all the great engagement. All the best.